Pre-budget sentiment. What to expect and how to prepare for the upcoming budget announcement. A slow zoom in on a picture of the Indian Parliament building. The Union Budget is one of the most crucial financial events of the year for India, shaping the fiscal policy and influencing market sentiment. As we approach this event, it's important to break down the key expectations, sector performance, and what investors can anticipate in terms of growth, challenges, and opportunities. Economic overview. Current market conditions transition to an animated graph showing recent market trends. The Indian economy has shown resilience, with the GDP growth estimated at around 6.3% for FY 2024. However, inflationary pressures remain persistent at 5.2% as of December 2024, while global uncertainties, especially from the US and China, continue to weigh on investor sentiment. For investors, the immediate question is whether the budget will support growth while keeping fiscal discipline intact. Sectorial sentiment analysis. Key sectors to watch: a split screen showing sectors like banking, infrastructure, and healthcare, with visual cues of respective sector graphs and logos. 3 sectors are being closely watched for potential growth opportunities post-budget: banking, infrastructure, and healthcare. Analysts expect the government to announce a significant increase in infrastructure spending, with estimates suggesting an allocation of up to 10 lakh rupees crore for infrastructure projects, up from 8.5 lakh rupees crore last year. In banking, experts are hopeful for reforms such as a reduction in corporate tax rates, which could boost profits for public sector banks. The healthcare sector may also see a boost, with a potential 30,000 crore rupees allocation to public health spending, as the government looks to address ongoing health challenges and infrastructure. Key budget estimates. Infrastructure -10 rupees lakh crore, healthcare -30,000 rupees crore. The market sentiment, bulls versus bears. A quick transition showing bullish and bearish graphs on the screen. The market sentiment is split. On one hand, we have the bulls, who believe the budget will introduce tax reforms, increased spending on key sectors, and relief for MSMEs. On the other hand, the bears are cautious, anticipating a higher fiscal deficit, which could lead to a reduction in government spending or tax hikes in the future. The expected fiscal deficit for FY 2024-25 is 6.4% of GDP, up from 6.2% in FY 2023-24. Expert insights. What are the analysts saying? Digital display of expert opinions and analysis graphs. Financial analysts are cautiously optimistic. According to a recent survey by the Economic Times, 60% of institutional investors are expecting the budget to focus on tax cuts for individuals and corporations, while 40% believe there will be a stronger emphasis on controlling the fiscal deficit. Additionally, analysts anticipate a 1.5 lakh rupees crore allocation to green energy initiatives, which could benefit renewable energy stocks. Analyst survey. 60% expect tax relief, 40% focus on fiscal deficit. Preparing your portfolio. How to align with budget expectations: a person sitting at a desk analyzing their portfolio, showing stocks like Indian Overseas Bank, IOB, and IRCON International on the screen. Voiceover. For investors holding stocks like Indian Overseas Bank, IOB, and IRCON International, it's essential to watch for announcements related to infrastructure spending and banking sector reforms. Analysts predict a 15-20% increase in infrastructure spending, which could provide a strong tailwind for infrastructure companies. For IOB, tax cuts for financial institutions could improve profitability, potentially increasing stock value by 8-10% in the short term. In addition, keep an eye on the renewable energy sector, with green energy initiatives expected to benefit companies like Tata Power and Adani Green, which are forecasted to grow by 12-15% in 2025. IOB. Potential 8-10% growth, IRCON. Potential 12-15% growth in infrastructure stocks. Conclusion, final thoughts. A zoom out showing a calm background of the market closing bell or the Parliament building. As the budget announcement nears, it's crucial to stay informed about the economic data, market sentiments, and expected reforms. The government's focus on infrastructure, banking reforms, and green energy could provide significant opportunities for growth. However, Investors must also be prepared for potential risks associated with fiscal deficits and inflationary pressures. By staying updated and aligning your portfolio with the expected budget policies, you can better navigate the market and position yourself for success. If you found this analysis helpful, make sure to like, subscribe, and comment below with your budget expectations. Stay tuned for more post-budget insights.